Good evening, everyone. Time for this week's silver update. This is the 8-hour chart, and I've drawn a number of lines on here. I'm going to explain those. This one trend line here, the long trend line here, actually goes all the way back to the end of August last year. Now, what is so very encouraging about this, I've explained it before that I accepted out these little drops to get the multiple confirmations on it. And I did draw another trend line, a tighter one, to get a more recent trend that we may be tracking. But obviously we're staying above this trend line. That's a very bullish situation, considering that we seem to be going into a type of QE3 scenario as we went into the QE2 scenario. And I've already covered the seasonals on silver. Those are also very bullish. These months of October, November, and December, September, October, November, and December, these are the most bullish months for the price of silver. So we're now launching from a base of around 40 as we launched from a base of around 18. So extremely bullish on this trend line. There's a new trend line forming here that is a little bit sharper, and you can see I've drawn a trend line down to form the top of this very large ascending flag formation. The other line I've drawn is the bottom of resistance of this consolidation area of the last high we had right around the May smackdown. So if we do get through this flat, this pennant, and that could be Sunday night, we might penetrate that. We want to look and see how we do around this area, and then how we get through this consolidation area. You have to remember, for terms of technical analysis regarding support and resistance, you are talking about, let's pull it out, let's get a little closer so you can see what I'm talking about. Well, we can't get the $50 one, so we got to go to the 4-hour. But you want to look at the number of days that you have spent in a certain area to determine the number of overhanging sellers that are waiting, because, as I've covered a number of times, the concept of support and resistance is simply that those who have purchased at a higher price than the current price, and therefore are sitting with a losing position, a certain percentage of those will get out as soon as the price gets even. In other words, they want to walk away. They don't want to take a loss. There's a large number of market players who don't want to take a loss. Now, that has to do with fear and greed, and really a lot of emotions that have to do with trading. And I encourage you to read the original Market Wizards, specifically the interview with Ed Seykota, where he discusses in depth the very dangerous emotions that affect market decisions: fear, greed, pride, and other emotions that affect the way you trade. But the principles behind support and resistance are basically that human beings never really want to take a loss, and as soon as it gets back to the price where they made their mistake, because you can see after they bought all through here and it crashed down to here, they knew they made a great big mistake. But the ones that didn't cut their losses early are carrying this all the way up, and a lot of them will actually sell right when it gets back to where they bought, which is the exact opposite of what they should do, because that proves that it's going up. So fear and greed and support and resistance, these are the key bases of technical analysis as far as the support and resistance analysis goes. So we're going to be heading into an area of resistance, but you have to count the days of that resistance, because the number of days spent at that price determines how many previous buyers are hanging over the price waiting to sell into it. So if you look at our dates here, you can see we only have the 18th, the 25th, and here just the beginning of May. So really just a couple weeks, maybe only 10 trading days of this activity here, while we have a long period of grinding up here. So that's something to keep an eye on. It's very possible that you could get a move right out of it, just blasting right out and just cut right through this resistance. Or you could also get a lot of consolidation and a slow upward grind until we break out. So that's what I'm keeping my eye on. I have no doubt that we're going through 50. So the only issue is how we do it. We're going through 50 very soon, in my opinion, and we want to watch and see how it's done. Let me take you over to the Bank of America chart, because that's really important. The move that we had today, you can see this is a bigcharts.com. It's not at MarketWatch, and you can create an interactive or advanced chart. I just did a candlestick chart of Bank of America, and if you remember a number of episodes ago, I called for Bank of America to be bankrupt within 1 month. And if you remember, we had the Warren Buffett intervention where he bought $5 billion worth of preferred shares, and we also had the sell-off of the Chinese assets that the assets Bank of America had in a Chinese bank, where they raised another $8.3 billion. But as you can see today, and I didn't pull up the article, but I think it's on the front page of Yahoo. As you can see today, the federal government is suing the banks. And they don't give the number, but they tell you that they lost $196 billion in toxic mortgages. So among those targeted were Bank of America. So I think a lot of people knew that this was in the works, and it's not a good sign for Bank of America. So I'm going to stick with my call. I may still be proven to be correct. The September news flashes that come fast and furious, you can get rapid reversals. So I don't have a trend line tool on this one, but you can see as I take the arrow down that the trend is firmly down, and we just ticked up with the Buffett buy, and now we're heading back down. So I still think Bank of America is heading below 5 and then heading ultimately to 0 as one of the largest banks in America goes bankrupt, and that's going to be obviously a very dramatic news event when that occurs. I wanted to jump over real quick to Gainesville. Gainesville has their Labor Day celebration going here with the balloons and everything, and they've got the 2012 Year of the Dragon right here on the front page. And you click on that, and you can see we've got our gold dragons and we've got our silver dragons, and we want to go down and look at the 1 ounce. And 1 ounce 2012 gold dragon coin and 1 ounce silver dragon coin are out of stock. That's the first day I've seen them, and they're out of stock. Now, we covered APMEX the other day, and I think when you go over to APMEX, you'll see that these are Lunar Series 2. You'll see that most of the, and here we go, we've got a dragon of the kilo coin, which is 32 ounces. That's a pretty big coin. There's some of those, about 300 of those, but all the rest of these dragons are gone. So that is just absolutely fascinating. And what kind of a market do you see that in? Do you see any other product that is out there that people want to buy? I mean, iPods, or I think you saw something like that with Xboxes maybe at one point where they were gone. And I think if you look into the facts of it, was an artificially induced shortage. So as far as most businesses go, if someone's selling something like hotcakes, there's going to be plenty of it because they're making a profit. So obviously this is a little bit suspicious. We also have the new silver kookaburra from 2012. That's the first time I've seen this one hit, and they're available September 23rd. So I'm going to go ahead and recommend the 1 ounce 2012 Kookaburra as something to really keep your eye on for the dips. Will you get them? I don't know. We've got $35.99 of these kooks left for 2012. It's not a pattern that I think is the best one that Perth Mint has done, but again, the Perth Mint is head and shoulders above the other mints as far as quality. The Silver Tiger that I bought for $30 when silver was $25, so I paid a $5. 20% premium for the Tiger. You can see they've got a few of these, and I thought that was Series 2. It's actually, I'm sorry, Lunar Series 2. It can be confusing sometimes on their site. And there they are. There's the Tigers. So this is the coin I bought at $30 when silver was $25, and you can see APMEX is selling them for $99 and $102, and there's just 14 in stock. So the 2 ounce is there, and they've got about 13 of them, and they're running at about $85 an ounce. So I encourage you to buy the numismatics. There's a number of reasons, and I'm going to touch upon those reasons as I look at an article here that has to do with silver mining stocks. There's a article posted by Scott Wright, which I've never read his stuff before. I've followed Zeal very closely, but this is from Zeal LLC, and the ones that really encouraged me to start buying heavily in early 2000s was the Adam Hamilton series, and maybe he's been replaced by Scott Wright, I'm not sure. But this article is on the silver stocks lagging. Now, if you followed my channel and if you followed my advice, especially my office series where I go into depth about it, I've always advised against buying mining stocks. And I want to outline the reasons. I don't have time to read you this article. I encourage you to read this article because it goes into some pretty in-depth analysis. You can see here he does a chart of silver stocks and silver. The blue in this chart is the price of silver, and you can see it's up 913% right there. And you can see the price of the silver stocks is up 114%. I don't know if these are accurate. You'll have to read it for yourself, but the main point is that silver stocks are severely lagging silver. You see the same thing with gold stocks. So I wanted to outline 3 very important points, the reason why I don't recommend these things. First of all, and the most important point of all, is if you truly believe that these metals are suppressed, what that means is that these metals are not allowed to reach their true inflation adjusted value. And what that means is that the inputs that it takes to pull these metals out of the ground, such as fuel and wages and real estate and all the other inputs that go into mining, if they have risen with the rate of money's debasement, but the metal that's being mined hasn't, it's pretty obvious you can conclude that it's going to become less and less profitable to mine something that is being suppressed in price. So if you really believe that silver is suppressed in price, if you really believe that gold is suppressed in price, this disparity between actually having a higher return on the price of the metal itself than the stocks that mine it, this is what you would predict. This is exactly what you would see. So that's the first reason I do not recommend any mining stocks. The second reason I do not recommend any mining stocks is their pieces of paper. And as I've said before, I think that we're heading into a paper bonfire where every debt or obligation or so-and-so owes me this or so-and-so owes me that, all of these are going to be annulled. They're going to be wiped out. We're going to start over, and a stock ultimately is a debt. Someone owes you a percentage ownership of a company, but that is probably going to be reneged upon when things get really bad. The other reason, and actually there's two other reasons. The third reason is that mining stocks always face the risk of the sovereign country they're in. So every once in a while you hear a story of a sovereign nation in South America or somewhere else in the world where a government gets elected or a government changes a policy and they decide, you know what, we're going to go ahead and nationalize these mines, and you know what, there goes your investment up in smoke. So that's going to have to be in your HUI or your mining index. Every once in a while you've got a company that's just seized and that money's gone. That goes to zero. The last one, the fourth one, very important. I haven't covered it yet. I'm going to cover it at some point, but it's a very important topic, and that is the naked shorting of shares. I don't have time to go into it here. I'll do a video that explains it, but naked shorting is essentially counterfeiting stock. Traditionally, when you short sell a stock, you have to go to a brokerage where there are longs, existing longs that hold the stock shares that they own in street name, which means the brokerage is allowed to loan those stock shares out to shorters who want to short them. Well, because of failures to deliver and I think it's the DTCC, I can't go into all the details here, but basically, because the system is not regulated correctly, there are parties that counterfeit stock. They sell stock that doesn't exist. It's happening with bonds, it's happening with stocks, it's happening with gold, it's happening with silver. So that's another reason why these shares don't rise in value, because they're being counterfeited. So there's 4 reasons why you don't want to take your hard-earned money and invest it in mining shares. I know I disagree with the vast majority of people on that. That's just my opinion, and that's what it's worth. So take that for what it's worth. And again, back to the chart, we're looking for a cup to form here. We're looking for a flag to break out, and we're fully expecting that sometime this fall we're going to go through 50, and then it's going to be very exciting to see how rapidly we move after that. And we'll talk to you next time.